Hi, good afternoon, everyone. Hope everyone had a wonderful weekend. Um, this week's topic, we're going to talk about how to protect yourself from fraud. Right? This is a topic that we don't really like to talk about, but it's important that we do. And I realized from a feedback I got from one of our students here, and then these trainings that I do, they requested for me to do something on fraud, and I thought it was a perfect opportunity to do this and help you guys understand what happens on the back end, what things to look out for. So I put this presentation together for you guys so that we can talk about this, and it's going to be one of these presentations where you feel free to jump in whenever, ask questions. I'll keep the chat open. Let me open up that right now, so that way if anyone has any questions, I can answer them as we move along in this presentation. Before I get started with the actual presentation, I do want to mention a few things. Let me just pull up a really quick email here that I got. All right, so I don't know if some of you have noticed, but recently, we're getting a lot of QC audits from lenders, right? And what happens is that the lenders that we work with are required to do QC trainings, or I'm sorry, QC audits, which basically means quality control, right? And it's just something that they're supposed to do. Fannie Mae requires them to do at least 10% of their portfolio. They require us to do at 10% of our portfolio. But then they may also just QC a file that has been submitted, and there might be something unusual or something that's catching the eye of the underwriter, and maybe they kick it over to QC for further review, or to have a second look, right, or to do a little further investigation. And we have noticed ourselves that there has been a sharp increase in these type of audits, and just wanted to talk to you guys about that. We work a lot with UWM, and we notice that there's been an uptick with UWM as well, right? And what they're looking for is any type of bar misrepresentation, or anything from the loan officer representation, of course, misrepresentation. And another thing to take note of too, is it doesn't matter if the file closed or not. At times, we've noticed that they're auditing files uh, that didn't close with them, or they were withdrawn for whatever reason, and so they can come back and ask questions about the file anyways, if they have any questions. And we've seen quite of those happen. And what draws red flags to them is if the underwriter starts conditioning stuff and questioning stuff on the file, and then you pull the file out because you feel like, oh, I don't want to address these questions or concerns. They can still audit the file, and then we still have to address the questions. So this is going to be the whole purpose of this presentation here, is to how do we deal with these audits, why are they happening, and what can we do to protect ourselves. But this is going to be an ongoing thing, and there's severe consequences. I mean, with not making sure that the files are clean, and that there's no type of misrepresentation on the files, because at the end of the day, it's your name, it's your reputation on the 1003 or the application, right? And everything kind of circles back to you. Us being a high volume shop with a lot of loan officers, they're not going to look at us as a company that's doing fraud. They're going to look at the individual, right? Because they understand how our platform works, and that we're bringing on LOs from all kinds of different locations, and with different experience and different book of business. So they're going to take a hard look at the loan officer. And we have had loan officers that have been blacklisted with certain lenders. And so I want to help you guys avoid all that. And I want to share with you guys what's happening on the back end. So let's get started. How to protect yourself from mortgage fraud, right? And very simple, right? We're in the front lines. We're talking to the bar. We have an opportunity there to interview the borrower, and kind of understand where the bar is coming from, right? And as we're interviewing the bar, we want to think about any red flags that may come up. And so make sure you do a thorough screening, and this includes any borrowers that you might get from a referral source. And I've had this happen with other loan officers, where the can you guys hear me okay? Someone's saying about the volume.
Yes, we can hear you.
Okay, so loud and clear. Okay, perfect. Yeah, so it might be your volume, Rita. All right. So the situation that happens once in a while is there's a realtor that's trying to get the loan done, and for some reason, whatever loan company they were working with cannot get it done. So they come to you, right? And they say, here's a complete package. Don't worry about anything. I'll be in communication with the borrower. You handle everything, get the loan submitted. And you're thinking, great, I have an opportunity to work with a realtor. He's giving me a complete package, but you have no access to the borrower, right? And you close the loan, and it turns out that there was fake pay stubs or bank statements, stuff like that, and you didn't think to even think about those things, right? So it doesn't matter how you got the borrower. Just always remember to do a call with the borrower to make sure that to introduce yourself as the loan officer, and also to kind of gauge and make sure that they're on board with everything that's happening here, and that you're going to ask questions about everything, right? And we'll get into how to, when you're looking at pay stubs and all that, we'll get into how to identify different red flags and catch things, right? But that initial conversation is very critical, right? It's going to tell you a lot about where the bar's mind is at, where they're coming from, the type of energy they have, and just take a note of that, right? Next thing I have on here for you is review the credit report, right? Look for unusual activities on there, maybe a lot of inquiries in the last 30, 40 days. They're trying to get approved everywhere. They're getting declined everywhere. So I'd always want to know why they have so many inquiries and why they're trying to apply and why they're getting denied. And sometimes what bars end up doing is they realize why they're getting denied, and then they'll fix that, right? It could be like maybe they didn't have enough assets, so now they have uh, a bank statement that has sufficient assets. And you guys know as well as I know now, with the technology and the PDF and Photoshop, the fabrication of documentation has gotten to the point where it's hard to catch, and you got to be very careful when you're looking at this stuff. But look for red flags like that. So on the credit report, just look for anything that's unusual. You know, Usually for me, the biggest red flag is just going to be a lot of inquiries in the last 30, 60 days, right? Why are they shopping so intensely? Why do they have 8 or 9 different inquiries? And you want to ask about those. Did you shop around? What did the other lender tell you? What type of loan were you looking for? All that stuff, right? Um, uh,
Pablo,
Identity theft. Yeah. Go ahead.
it's Rhonda. I have a question for you. I just recently got a new borrower, and she sent me, she just started a new job, but she sent me pay stubs that didn't have the hourly rate or the number of hours on that, and that seemed to be a red flag to me. Would that be a
Yeah.
red flag to you?
Oh yeah, of course, because it's not standard, right? Usually you're used to seeing
Yeah.
all these things on the pay stubs. So my next question would be, how long was she employed there, right? Was she recently employed there, or she's been there a while?
She said she was there for the last year or so. So I said, well, you're going to have to get some pay stubs that show the rate and the number of hours, or we're going to have to do a verification of employment. And also on your new job, which she's supposed to get a pay stub this week, I said, I'm definitely going to need to see the rates and hours because I can't work with that. So that's what I told her.
Okay, yeah. So you can always, and you did the right thing. Get the VOE if you need to. And some believe it or not, smaller employers that are not big. I've seen some even handwritten pay stubs that were legit. But I mean, I'm looking at these and I'm like, I want to make sure that they're legit, they're real. And the customer, usually the bar can provide me like the last 6 months of their the handwritten pay stubs, and then even some from the previous year. Then I start believing it more, like this is how you're getting paid, right? They have some old school HR person that's just doing everything handwritten. So doesn't necessarily mean there's fraud. What it means is you just have to investigate further and cover yourself. And one of the best things, you guys, if you tune out of this presentation by as I'm speaking, because I know it's not a exciting topic, but the one thing that you should walk away from this presentation, and I'll say it now, is make sure that any and all documentation you have an email confirmation from whoever sent it to you. So whether it's the bar or the realtor, whoever, because when they start investigating and you say, oh, well, this stuff was given to me by the realtor, guess what the next question is going to be? we want the email confirmations that it came from them, that it originated from them. And that kind of washes your hands, because now you can say, this stuff was delivered to me, I had nothing to do with it, right? When you say that and you can't back that up, then you start saying, oh well, they actually came to my office and dropped it off and this and that, then you start looking a little sketchy, right? And I know this to be true because that's the number one thing the auditors ask, is when the loan officer makes the excuse that, well, these pay stubs were given to me by the bar or the realtor, whoever, that CPA, whatever. Okay, and then the next question is, please send us over the confirmations, time stamped and everything, that it actually came from them. So whenever you're receiving documents, just make sure you're creating folders. You're able to do that on our email that we provide for you. You can create folders and save everything, because you never know when you're going to need it, and you're able to pull those emails up and everything, right? If you do accept documentation, then they come into the office and have a witness or have someone else that can uh, testify to you, saying that, or back you up, that those documents were actually indeed dropped off. Even take a photo. I don't know, like just have because again, when something goes down, the spotlight's always on the loan officer. And why? Because we're expected to do these QC things that I'm going to talk to you about, like our own, catching things and everything. And if you have more than one or two of these, and you start looking a little suspicious, if you know what I'm saying. So you want to avoid all that. And one of the best ways to do it is just document you receiving everything from everyone else, right? That's a sure way of not getting in any trouble, because now you can show that you received these items and you had nothing to do with anything that was received by you, right? Because how could you manufacture or change anything that you received, right? So just keep that in mind. All
Hey,
right, so moving
Pablo,
on.
quick question.
Yeah,
If they're uploading it to our electronic application, we're covered, right? Because they're uploading it.
yeah, it should be I'm gonna go in there and look, but it should be time stamped on there when they uploaded the documents and all that. Okay, the date and the time that they uploaded everything. So yeah, just make sure you're covering yourself in that sense. All right. So next thing here is identity theft. There's this is not a common one, but you always want to verify a borrower's identity. We've had situations where uh, a son, elderly son, let's say he's 40, 50 years old, and then he has a father that's maybe 80 years old or whatever, maybe trying to make a move on his parents' property, or something like that. And so you want to make sure that you're dealing with the right person. Sometimes they'll pretend to be someone else, and and in cases where they say, oh no, you know what, I'm applying for my mom, she's not available, I'm going to handle everything. That's fine. Just get a written authorization from the main borrower. Like if you're working with someone else, and it could be for good reasons, maybe the person's disabled, maybe they're whatever, and but get it in writing. And also, if they have what is it called, the authority to I'm thinking of the documentation. I can't even think right now. But
Is
if
it
they have
power of attorney?
power of attorney, thank you so much. I knew one of you guys would say it. Power of attorney. If they have the power of attorney, even better. Get that documented, save it, upload it, so that you know that you have permission and you're talking to the right person. Because that can get you a lot of trouble too if you're disclosing information to someone you're not even supposed to be talking to about their file and all that, right? So and in that case also, if someone calls you on a file and they're asking for information, make sure that they're authorized to receive that information. I don't care if they're brother, sister, whatever. Oh, I'm calling checking on my sister's loan. You cannot release any information about the file to anyone except the borrowers, unless you have written authorization from the borrower or borrowers that are on the actual application, that have signed the application. Then anyone else, hey, that's great. Put an email together, CC your sister, and then I'll be able to speak with you, or we can do a three-way call. And then I need her authorization before I can speak to you about anything. And that includes real estate agents, attorneys, anyone that's not on the application. We have to respect the borrower's privacy no matter what. I don't care if it's Jesus calling. We still need to get authorization from the bar, because that can get you in a lot of trouble. Okay.
Pablo, it's
Um,
Rhonda. I have a question. When you have applications in your link origination system and the file never got submitted to underwriting, they put information in there, but then they decided they couldn't do anything, but it was never, you never got a complete application. Can you just withdraw or delete that information? Is there a process that we have to follow for that? Like
no, you
someone just
can't. You
entered,
can't delete. You can't delete anything. You just leave it in there
I
as
don't mean
withdrawn.
delete. Yeah,
Yeah,
just withdraw it.
yeah,
That's what
just
I meant
withdraw.
to say.
Yeah, yeah, just withdraw
Okay.
it. You cannot delete because we have to keep records for 3 years. That's the law. And again, if you're not sure about someone's identity, feel free to ask them for additional identity, especially if you have someone with expired, an expired license, that's pretty common, then you want to double check, especially if you already have all these other red flags that we're going to talk about here, then because it's not one thing, right? Like not one thing in itself is not going to be bad, but as you're moving along in the process with the borrower, little red flags might start going up on different things. And then as if you realize that wait a minute, there's way too many red flags here, I'm not getting a good feel here, I'm not getting a good sense here, then that's when you want to look at things a lot closely, right? But there might be one thing that's off and it could be normal, but don't let that alarm you unless it's something alarming. It's when you start seeing an accumulation of different things, right? Like if you're being rushed, just hurry up, get everything done. You don't need to you don't need to call the bar, and start being smart. Have a process that you follow no matter what with everyone and everybody, and that's going to be okay. And you should be okay, right? One of the most common types of frauds with employment that we're seeing here is when you convert a 1099 or a self-employed borrower into a W-2 wage earner. Why is that such a big one, right? And it's simple because the guidelines for FHA, conventional, and even VA allow someone that's been self-employed in the same line of work to start a new job and be on a salary, right? So most self-employed people don't qualify because they underreport their income, and we run into DTI issues, right? So a simple fix is, hey, well, let's just get you a W-2 job and get you a pay stub and a promotion letter or a job offer letter. And within 30 days, now you have a new salary that you can count, and now you have an employment that you can use and you can qualify without even waiting. So a
What
lot of
about the
people,
other way around, Pablo? From a
the other
W
way,
to the
the other way, it's you can't, because remember, if you go
1 year,
salary to W-2, there's at least a 1 year waiting
1
period
year.
with most lenders, but it's commonly 2 year waiting period because you have to show that your business is successful and it's doing well. And the lenders will take 1 year or 2 years to determine that because you got to see how you did. Whereas the other way around, if you become a salaried employee, you're guaranteed that money, you have an offer letter. And not to say that that doesn't happen, it does happen, right? You might be a lawyer that's been working by yourself for like 20 years, and then you said, you know what, I'm just going to go work for the government now. You get a job with the government, now you're an attorney for the government, and you have a salary, and we can use that right away without there being a waiting period. There's going to be many examples, but a lot of loan officers get this bright idea. They may know like a small business owner that owns like a print shop, or it could be anything, a mechanic shop, and then they work something out with that employer and say, hey, let's bring this person on, we're going to give him this title, and you're going to give him an offer letter, and now we're able to get him into a property right away, right? You might not do that, but there's a lot of realtors are aware of that, and that's one that's very commonly used. So make a note to yourself when they've gone from self-employed to salary in the last 90 days. Take a lot hard look at that, because what a coincidence that they're buying and now they have a salary job, and they switch from self-employed to W-2, right? So that's a giant red flag for me all the time, because if they had done it 6 months before and now they're buying, it makes more sense, right? Because now you have 6 months of pay stubs, and it makes more sense. Now, the way you get caught on this one is the lenders have us execute a 4506 to get copies of the transcripts, and they can execute this document whenever. The surfacer can execute it, right? And this can happen a year from now, 2 years from now. You think you're in the clear, and we've had audits happen on files where the main investor makes the wholesale lender buy the loan back, right? So the investor makes the, or or it could even be, and the investor could be Fannie or Freddie Mac. They say, hey, and I'll use UWM as an example. Hey, UWM, we got this loan. We just audited it, and it's been a year, let's say, right? We just audited it, and we determined that this person qualified using a false job. They submitted a salary with a couple of pay stubs, but at the end of the year, when they filed their taxes, there was no W-2. The W-2 was only for, enough to get them qualified, right? Let's say that they were making 10,000 a month, and they only provided 2 months. That's 20 grand. The W-2 came back 20 grand. Had the person had legitimately had the job, then the year to date or the W-2 would reflect all the way to the end of the year. You get what I'm saying? So that's an easy catch for them. Like that's you're not going to trick anyone down the road. You may trick them in the beginning, but if they don't file all the way through, then that loan could come back, and then they send me a letter saying that I have to buy back the loan. And then guess what happens? And I have to go back to you. You guys all have contracts with us agreeing that if there's any fraud or anything like that, you guys are going to buy back the loan, right? So it's just a domino effect that goes all the way back down to the loan officer. And we want to avoid those type of situations at all costs, right? And this is why we're doing this, because this can be very costly. The most likely what ends up happening with that loan, since no one has the money to buy it back, I don't have the money to buy it back, right? If it's a $900,000 loan, I cannot buy it back. The wholesale lender has the money to buy it back, so they'll buy it back, and then they'll make a scratch and dent it, which means that they're going to sell the loan to a scratch and dent market that exists, and the scratch and dent market will buy the loan, with a discount of maybe 15%, whatever. So then we have to cover the difference between the discount that UWM sells a loan, and that could be, and I'll give you an example. On $1 million loan, that could easily be over $100,000, that we're going to be on the hook, and we got to figure out how we're going to come up with that money. Anyhow, that's the length of it. I won't mention that anymore, but it's worth mentioning it so you guys understand how we can't escape this. Like it's going to be there, and something that you do now, believe it or not, can come and haunt you 12 months down the road. And we're seeing that, right? And not because UWM wanted to catch it, Fannie Mae caught it, and they start asking all these questions, and they're good at auditing. They're going to audit everything, and there's no waiting period. Like, they once they they'll give an opportunity to explain and say, hey, what happened here. After that, if you can't explain it, then then it goes down the chain of purchasing. All right, so let's continue with this verification of employment. Make sure that you verify employees at all time. You can call and ask yourself. In most cases, you're going to have a big employer, right? You're going to have a government employee. You're going to have UPS, FedEx, Coca-Cola. I mean, a big employer. And you're going to be able to see that they submitted to your tax returns. You're going to see W-2s. And for the most part, you're going to have a peace of mind, right? Because in most cases, everything's going to make sense. Like they got your pay stubs. They got 2 years of W-2 history. They filed taxes, same employer. They've been there a long time. No need to really go any further with that, right? Now, when you need to start verifying things is when things just start looking fishy or weird, right? And another area of employment that we want to look out for is someone suddenly has a big increase, right? And they had been making 50, 60,000 for the last 3 years. And then all of a sudden they're buying a house and now they're making 150,000 a year. I mean, that's a giant red flag. Like, what a coincidence that right now that you're buying, your salary just jumped up to 150,000, right? So we got to be smart and catch these things and realize like, you just got the raise. You're trying to qualify for a home. Is that really what's happening here? And, if someone got a raise, if it's 4 or 5 months and they got pay stubs, and it makes it a little bit more like, okay, they didn't just get the raise. They're not getting the raise while they're buying. They already got the raise, a few months back, and but you still want to take a hard look at all that because you want to see what's going on, especially if they had stable income for the last 3, 4 years. Stuff like that happens, right? And it could be the same employer. For example, a dentist that owns the dental shop, and maybe the HR person's good friends with one of the dental workers, smaller business. Maybe there's only like 5 or 6 employees, and they can try to pull that stuff off, And what happens again is that they'll report that high income just through the application process. And then once they gotten their home, then they'll return their income to whatever it was, and then at the end of the year, the W-2 is not going to make any sense to whatever investor bought that loan, right? So yeah, and by the way, there's people getting away with stuff. You know, there's stuff that gets through and falls through the crack, and people feel like, oh wow, I got away with it once, right? So then they do it again and again, but eventually they get caught. You know, my red flag now is, as a broker, I'm looking for you. If these situations happen and you know you're charging a lot, you shouldn't really be getting away with that. Our customers keep us in check. They remind us that they can shop elsewhere if we're overcharging them. So only someone that's consistently overcharging, for me as a loan officer, it tells me something. Application fraud, you know, that's very simple. Applicant provides pay stubs that have been altered, inflated income figures. They may also provide fake W-2s or bank statements to support their application. Do a little math. Look at the application. You know, make sure the year to date makes sense. We've had people, you know, try to falsify pay stubs, and you can see like the change of the font. You can see things are not aligned. The pay stub numbers are off. The year to dates don't make sense mathematically. You start adding things up and it just doesn't add up, right? Or some of the ones I've seen is where they copy the same pay stub and they don't make any changes on it, right? So these are all things that you want to look for when you're looking at a pay stub. And if it feels funny, if it looks funny, if something seems off, then it's worth investigating more, because people will falsify pay stubs. I mean, that's something that people do. So just look for any type of discrepancies on the pay stub. Usually they won't get the FICO or the tax withholdings and none of that correct. And you can start kind of catching it and seeing a pattern. Document analysis, look for signs of tampering or alterations. If submitted documents such as inconsistent fonts, mismatched dates, request original documents. When possible, ask for original documents such as W-2s, tax returns, cross-verify. Inconsistent information, discrepancies between income statements, tax return, and pay stubs can indicate manipulation. Unusual formatting, documents that look unprofessional, have inconsistent fonts, or lack standard formatting may be suspicious. Missing or altered details. Check for missing company logos, contact information, or altered figures. Altered dates or amounts can be a red flag. Exaggerated bonus or overtime. Claims of unusually high bonus or overtime hours may indicate inflated income. Uncommon income sources of self-employment claims without documentation can raise concerns. Inadequate tax documentation. Uncommon income sources or self-employment claims without documentation can raise concerns. Pressure tactics. Be cautious if buyers are rushing the process or pressuring you to overlook documentation. So pressure tactics are one of the real ones you want to look for. I mean, that's usually that sense of urgency is, you know, you gotta, sometimes authentically they do want to close fast. You guys all know that, but when they're trying to give you limited access and you're the loan officer, that's really when you got to look out for, you know. Property history. So, you know, there's fraud that can be done also on property valuation, right? There's not that much of that happening right now, so I'm not going to touch too much on that. Believe it or not, back in the days when I started doing loans, they were still using the actual photo prints. You know, you printed and got the prints, and then the appraiser pasted them onto the appraisal report. You can even imagine that, right? So when you got an appraisal report, it was actually all original documentation with the actual original photos. And I remember there was loan officers that would just take a picture of another house, put it on there, and I mean there was a lot of like crazy stuff happening just to create more comps, right? And that was during a time where that was even more prevalent. You know, you can't really do that now. So now we know we got to deal with AMCs, and you know the appraisers you go out there, and I mean we could still have some type of influence or everything, but now we're very limited, so we don't really see too much of this happening in this area like before, but it can happen. You know, if an appraiser ever asks you for extra money to do a value or anything like that, you know, just let us know about it. But that's the only way I could really see that happening. In most cases, appraisers are not going to do anything for an extra $200, $300, or $400. You know. Any questions on this one? Anyone have an unusual scenario or know of any type of fraud that we can discuss with appraisals? All right. So we'll move on. Use technology, right? There's fraud detection tools. I know that we have LexisNexis. You can go online and verify employments. Like make sure that the company is listed on the internet, that it's actually a legitimate company. Look for reviews. Look for all types of things to make sure that what the bar is telling you, it all makes sense, right? They're also in the same area and everything. Um, data verification services. So we have like funding suite and the work number and all that. So make sure you're utilizing all that. And just make sure that you're on top of common. These fraudsters they're always trying to get one step ahead of us. Whenever I purchase a property, I'll go online and I'll go on a website directory and I'll get the phone number from there, even though I have the escrow paperwork and everything, and then I'll call that number. I'll talk to the escrow officer. I'll make sure I know her voice and then talk to her. And then so that by the end, when I have to wire all the money, then I make sure I wire to the right place. And then also, when you initially wire funds, your earnest money deposit, the 10, 15 grand to open up escrow, you want to let your bars know to save that documentation, because if there was an issue wiring the first time, then they would have found out about it at that point. That means that they have the legitimate the wiring information, right? So keep that information. And any type of fraud that's out there that's happening, we got to let the bars know, right? But the wire fraud is probably the biggest one. Any type of scams that are happening, just let your bars know. And that's the main one, just verifying the wire where you're going to wire your funds to. And let them know too that we're never going to ask for any money. Sometimes these fraudsters will email the bar saying, oh, I need an extra $500 for the appraisal and something like that. You need to send it right away, right? And so just let them know that we're never going to ask for money like that, at least, right? Maintain, have an open communication with your bars. Make sure you understand them. Make sure you feel good about them, and make sure you maintain communication with the bars throughout the process. This will help build trust. Sometimes bars, in the beginning when I'm interviewing them, I let them know to please let me know everything. Like, I'm on your side. I'm not here to hurt you. And sometimes bars feel like they want to withhold information and not tell you something because they feel like it's going to harm their opportunity to get the house, right? And I always tell the customer, tell me everything. My job is to see what we do want to show underwriting, what we don't. And my job is to make sure that I get you approved. And by you letting me know everything, it's going to minimize the chances that something bad or we're going to run into problems down the road. So, and keep that in mind. Bars are sometimes hesitant to say certain things about their personal life or about something, either through embarrassment or just the fact that it might not help them qualify, right? Keep thorough notes of your conversations, as these can be useful for issues if they arise later. And the best way to do that, and now we tell people CYA, cover your ass, CYA. Get everything in, if you have a conversation with the bar and it was not recorded or anything like that, then do a follow-up email and say, hey John, great conversation. Noted, you do want us to charge your credit card for the appraisal, and whatever instructions they gave you verbally, then just write them down on an email and send them out to the bar, and that way you have it written, because you never want to get into a situation where it's your word against their word. My email on my email, it has on the bottom, be careful for fraud. I always let the customers know, just remind them that they're going to be that there's fraud happening, so that they have to be careful. And any type of have that I feel that are important is you want to email them as well and say, hey John, great talking to you. Just reminder, anytime you're going to wire funds, please verify with the escrow title company and let me know about it first, so that I can make sure that that there's no issues when it comes to wiring the funds. Be involved. I mean, you can be overly involved, and the crappy part for you, and I've seen this a few times already, is when the bar wires the money out. And by the way, we've had a lot of bars get lucky and get their money back. They had to wait though. I think the most recent one that happened was the guy wired the money after he was told numerous times by the loan officer not to do it until he verified, and he did it anyways. And the couple of times that it's happened, they were warned like heavily, not even a little bit, heavily, and they still did it. Luckily, they got their money back, so it wasn't bad. But for the loan officer, it was a very stressful situation, because now you have the seller like, well, too bad that they lost their money, but I need to close my property. I can't be waiting for you, right? And they're calling the East Coast bank that got the money. They froze the money, but then they have to do an investigation, and they say it could take up to a month or 2 weeks. And now you're in limbo, and you're wanting to close this transaction, and the money's stuck somewhere. So just we want to avoid that at all costs, so that way you can have a clean closing and move on. So there's no way you cannot be overly involved. Encourage honesty. Make it clear to the bars. I had someone call me like a while back and say, hey, I heard you guys make pay stubs. I'm like, what do you mean make pay stubs? I don't know where you got that from, right? I mean, no, we don't make pay stubs, right? We do everything by the book. Oh, okay. I thought you guys do pay stubs there. And I'm like, no. I'm like, no idea where he got that from, but right away put a stop to it and didn't even want to continue with that person. And again, your name's going to be on the application all throughout the whole process, even when the file is closed, everything. The thing about what we do here is it leaves a paper trail, and it's always going to point to someone or somewhere, right? So just remember that. And again, the best thing to do is earn that trust with the bar, and I noticed when they feel like they can trust you, they're going to open up and share things that they might not have told you, right? Because they were either, hey, I just got a DUI and I didn't want to tell you that, and that's why, whatever, I was in jail or this or that, and all these things help, because then it helps explain, like, well, that explains why you weren't at your job for a month, right? Or whatever. And then, let me know, and then I can help you, and then I'll help you paint the picture that we need to get this deal done. One thing that we started doing as a company, just so you guys know, is when I started doing this a long time ago, I would get we get the wholesale applications from the lenders. They make us sign agreements. When I sign up for UWM or Equity Prime or any of these lenders that we work with, I have to sign agreements. And we have a person in-house now that looks at all these agreements to make sure they're not one-sided, because what we started noticing is that they can pretty much sue us for anything. Some of these contracts, the way they're written, they can sue us just because they want to sue us, almost type of situation, right? And then there's other good lenders that have a process that give us an opportunity to fix a loan and do certain things that it's more favorable and more level, not just for us, but for you guys, right? Because ultimately what's going to happen is if something goes bad, then it just goes down the channel, right? It goes to us, and then we bring it to you and say, hey, you cost us a $50,000 loss on this loan. And so I didn't pay attention to this before, but as some of these things started to come up, we realized that the importance of these agreements that we have with our wholesale lenders is very important. It's, and we're going to do this not only for our own personal protection, but to protect you guys and not make it easy for these wholesale lenders to come in and say, hey, you just got to buy back this loan, no matter what. And then there's nothing we can do about it, because the way the language is written on these contracts screws us. So we're going to be doing a lot of that again. And they're not used to that, because a lot of companies don't do that. They don't have the manpower to do that. But that's something that we decided to do. And Serafin is doing a good job. He's the one that's spearheading that with Jacob. He's our internal law guy that reads all the agreements. And I want you guys to know on the background that that's what's happening. And that's something that we're doing not only for your protection, but for our protection. And anytime we decide to sever ties with a relationship or with a wholesale lender, it's going to be for that reason. But we let them know, hey, the door's always open. You can always reword your contract, and then we'll get back to business. I want to thank you guys so much for participating in this. And I know it's not a fun topic, but it's something important that we need to talk about once in a while. And I also wanted to have this in the training room, since we don't have any discussions about fraud. So thank you for your participation, and any questions that might come up later on, feel free to email me, ask me. This is an important topic, It affects our livelihoods, and we want to make sure that we don't get in any trouble. So I'll see you guys next week. Have a good one, and we'll be in touch.